Foreign investors are staging a buyer's strike against U.S. assets. But not only does this raise serious concerns around the U.S. government's ability to keep financing its massive deficit, but it also proves that global confidence in the dollar is cracking at the highest levels. But that's not stopping the U.S. from printing and spending as if there will always be buyers. But those buyers are backing away not just from U.S. treasuries, but from the illusion of U.S. financial stability. And meanwhile, in the background silently, gold is continuing to cement itself at the center of a new system where the dollar is no longer dominant. So why is this buyer strike happening now, and what comes next? If trust in the dollar is breaking at the top, what does that mean for those of us holding it at the bottom? And most importantly, how can you use this information to protect yourself before it's too late? Let's get into it. A recent $16 billion auction on 20-year U.S. Treasury bonds has rocked the financial system. Despite these bonds offering almost 5.1% yield, or that you would make 5% to just hold these bonds annually, mind you, the second highest payout offered since the Great Financial Crisis, demand for these bonds was dismal. But this is not just a small red flag, this is a massive warning signal showing us that the rest of the world has lost faith in U.S. sustainability of our debt. In fact, the bid to cover ratio, or a measure of how many buyers show up to how much debt is offered, came in at 2.46, below average, meaning there were even less buyers from the start interested in our debt despite the unusually high payouts. But if you're wondering if this was an isolated event or a one-off bad auction, the answer is unfortunately no. Deschutes Bank's head of research himself has said that this was a full-blown buyer's strike led by foreign investors. Investors who historically have propped up the United States deficit by buying treasuries, although now it seems that they finally hit their limit. Now, central banks have been quietly offloading their treasuries for years. That's not new. But what's new today is the double whammy of offloading their current treasury holdings as well as foreign investors not taking on any new U.S. debt. Something we just saw this past week with China, the second largest foreign holder of U.S. debt, now dropping to number 3 behind the UK. And before someone says, well, that's just China, this is not a one nation problem. This is a trend across the board of countries moving away from the United States. In fact, even our allies, Japan, the largest foreign holder of U.S. debt, is facing its own economic crisis, with Japanese Prime Minister recently admitting that, quote, their fiscal condition is worse than Greece's. Let that sink in. As a quick reminder, Greece's debt collapse was so severe that they ended up resorting to a bank bail-in. Not a bailout, but bank bail-ins, where everyday citizens' deposits were frozen overnight and seized to save the system. Not to save the citizens, but to save the system, to make sure that the creditors were repaid. And the scary part is that is 100% legal as it stands today, yes, here in the United States. They, of course, don't want you to know about it. They don't want you thinking about it. But in a situation where the debt crisis got bad enough, which we're on track for, the currency would be devalued so severely, eventually revalued, where it would be worth next to nothing. And in that emergency situation, banks would freeze your accounts. They would take what they needed to make themselves whole again, and you would be left with nothing. Tell me what you think in the comments below. Were you already familiar with this? How long do you think it would take before they resorted to a bank bail-in here in the U.S.? Tell me your thoughts in the comments below. Because all of this isn't meant to scare you as some distant what-if story. The reality is that foreign nations' economic problems are directly impacting us here at home, especially with the dollar being the global reserve currency. As Japan's yields surge, which their long-term bond yields are hitting record numbers right now, Japanese institutions might be forced to sell their holdings of U.S. treasuries. Again, as a reminder, Japan is the largest foreign holder of U.S. debt. What happens when they decide to sell? Not only is it going to mean that we need to find more buyers, but it's going to make our yields go up, meaning it is more expensive to service our debt at a time when $7.6 trillion in debt is maturing this year in 2025 alone. This is what an unsustainable debt cycle looks like. We are in a debt trap right now, one that is only getting worse by the minute, especially as the United States prepares to spend more and collect less. This is only going to add fuel to the fire. The dollar is telling us everything we need to know. The bond yields are telling us everything we need to know. Real money, gold, is screaming at us the truth that we are nearing the end of this fiat currency life cycle. The debt to GDP ratio is now on track to exceed 125% by the end of this year. If you don't think that that means that we are going to be printing more dollars, therefore devaluing all of the current dollars in circulation, meaning that our purchasing power will continue to decline, it is the only option left. The U.S. has played all of its cards. Look at the dollar itself. The dollar index, or the value of the dollar against a basket of currencies, is down over 8% just this year. The dollar is supposed to represent strength. It is the global reserve currency, the backbone of the financial system, but instead it is showing weakness, a lack of trust, and a lack of confidence. But for good reason. Central banks know the truth, that the printing press is being warmed up right now, that the dollar will continue to lose its value, and that they can no longer trust U.S. Treasuries or the dollar or the United States because there's no meaningful action being taken to reduce the debt or to stop the spend, and this game cannot go on forever. As they continue their buyer strike, what are they replacing those assets with? As they remove U.S. Treasuries off their balance sheet, what are they moving to instead? To gold, to physical, tangible, real gold, a real true store of value, one that cannot be printed into oblivion, one that has withstood the test of time. Central banks aren't looking at one move ahead, they are looking at 10 moves ahead. They are preparing for the future, which is why they're not worried about daily price fluctuations in gold. They are continuing to snap up as much gold as they possibly can, stockpiling at the highest levels in modern history for a reason, because they understand that gold's true value is much higher than whatever the spot price might be today. As gold continues to move to the center of the new financial system, one that will have to have some level of trust that can only come from a true proven commodity such as gold, an asset that has withstood the test of time. That is why they are stockpiling gold, because again, they are looking to the future. They are preparing and positioning now. Now is the time to act, not react. You have worked way too hard for what you have to leave it to chance, which is why I am so passionate about encouraging everyone to make sure that you have a strategy in place. And if you don't know what I'm talking about or how to begin, or you just want a second opinion, that is what our team is here to help you with, to make sure that you have a strategy, a custom strategy for you and your financial situation, so that you are prepared for what is coming next. One that's not based on paper wealth or digital wealth, but real, true, tangible wealth, real money, gold and silver at the center of it. Call us at the number below. Click the link in our Calendly or scan the QR code, whatever works best for you, as long as you make sure that you have a plan in place so you are protected. That is my wish for everyone. Take control of your financial future today by taking the first step. This isn't just about financial protection, it's about freedom and peace of mind. Knowledge is the very important first step, and then it takes courage to act on that knowledge. So again, call us at the number below or talk to one of our expert analysts who I work with every single day, who are experts in helping people just like you find out how we can help you too. And in the meantime, as always, I so appreciate you being here. I'm Taylor Kenney with ITM Trading, your trusted source for all things gold, silver, and lifelong wealth protection. Until next time.